How's it going, fellow traders? It's Magic Trader here, and wanted to do a video that was inspired by a conversation that I had with a current student. So the question came up in regards to understanding the Aruja report and the analysis that we break down for you in this report. So the first thing I want to point out is that what we are teaching here at the school is an understanding of the market that goes very deep. Okay? It's about understanding how the market works and why it works, why it does what it does. Because without understanding this, you really truly can't understand what trades you should be getting into and why you are getting into those trades. So it's like learning, it's like learning to read. Okay, learning to read and comprehending what you are reading are two separate things. So it's very important to understand this, because what happens is a lot of people join the school and they just want to have somebody tell them what is being read. So for instance, you want to learn how to read. But I'm telling you that in order to read, it's not just about reading words on a piece of paper. It's about being able to comprehend what you're reading, to understand the logic of what the words are expressing. That is where you find success, okay? In language. That's how you find success in reading. This is about understanding logic, how to be a critical thinker, and then how those two allow you to have knowledge and allow you to really grasp what it is that you're absorbing. Okay, so if there was a book, and on the first page it explains a story. Now, depending on your life experiences, what level of education you have, how often you've read, whether you've studied philosophy or any other type of subjects that would help you in becoming a critical and logical thinker, depending on that, where you're coming from in life, everybody will have a different interpretation of what they're reading on that page. So this is why signal services, they don't work, because a signal service is basically telling you, hey, here's a trade, get in here, stop loss here, and targets there. Now, it may seem very simple, right? Get in here, targets there, and that's it. The problem with that is, if you think about it this way, if you didn't know how to read and you didn't have comprehension skills built up to comprehend what you're reading, it's as if you go up to somebody and say, hey, here's a page in a book and I want you to read it to me. Now, the reason why you want it read to you is so that you understand what is on that page. But if you haven't built up the skills to comprehend what is on that page and why what is being said in the way that it's being said, if you didn't have those comprehension skills, if I read that page to you, one person will have one understanding from it, another person will have another understanding. There'll be multiple understandings of what's being read on that page. And you'll have assumptions created in your head of what it is that you're reading. Now, if the page was giving a set of instructions and I read the instructions to you, one person would receive the instructions in one way and another person would receive the instructions in another way. If those two people follow those instructions, the end results would be different. Reason being is because of the lack of understanding, the lack of comprehending the instructions. And with trading, it gets a little bit more complicated because things are not as simple as just buying and then putting orders in the market, because you're also dealing with your emotions. And when you get into a trade and you don't comprehend the reason why, and you don't understand the reason why, you're going to see the trade, and you're going to have a lot of emotions running through you, and many times you'll end up getting out of the position a lot sooner than you're supposed to, or the position size will be a lot larger than it's supposed to be, or you'll turn a winning trade into a losing trade. Whereas the person who is actually understanding why they're taking the trade, they understand the logic, the reason why, they will be able to manage their emotions because they know what they're dealing with. They know exactly what risk they should put on, how large of a position, if they should add to their position or not add to their position, and they will have the emotional ability to sit through that whole trade and let it ride out. That's the difference between a person who's put in the time to understand the logic of why we are doing what we're doing and why a trade is to work out, or why we would sit on the sidelines because taking a specific trade is risky. So that is what you need to be focused on. That is why you're here at this school, is to learn the logic, okay, to get you the understanding so that you have the wisdom, the knowing. It's not until you reach the wisdom of knowing that you can be a successful trader. It just works like that. And that's why we get hundreds and hundreds of students that tried every signal service imaginable out there, and they did not find success. So I just want to reinforce what it is that we're doing here. The student who takes the time to do the homework, come to class, watch the sessions, listen to what we discuss, journal in their journal what it is that they are learning, what it is that we are discussing, will soon realize why we are discussing what we are, why we are pointing out what we are pointing out. Because everything we do is for a reason, for a very specific reason. And so it's not until you take on the process of journaling and joining the sessions and doing the analysis yourself and doing the homework and finding out why your zones were drawn incorrectly, why your trend lines need to be adjusted, all those little details, until you fully grasp why we are doing what we're doing and participating in that process. Until you do that, you will not build up the comprehension of how the market works. So when you have that comprehension, you'll be able to come to the report and fully understand it. And even before you build up your comprehension, the report is an incredible tool to build up your comprehension of what is taking place. You know, we can open up any report that has been done, and you can read any entry that has been made. And what we will point out right here under the overview section, what we are pointing out here are the positions of the banks. What are they doing with their positions? Because at the end of the day, we know it's the banks who move price. All right, so we need to understand where they are moving price, how they are doing it, and what are they doing with their positions. That's the first thing you need to understand. Once you understand what it is they're doing with their positions and how it relates to what's happening on the charts, what we're writing here under the overview section is what is happening on the charts in relation to the data. What formations are we seeing in relation to the data? What trends or lack of trends are we seeing on the charts in relation to the data? And what does this mean? What are the chances that price drops? Are we expecting price to drop? Why are we expecting price to drop? Under what circumstances would price drop? We are breaking it down. We are using our logic our understanding and our knowledge that we've acquired by studying the markets to lay out for you exactly what we're seeing. This is being critical. This is taking the data, looking at the chart, being critical with what we are seeing with the information, applying our logic of what we know to be true about the markets to give us an outcome or a potential outcome. Reading this report will give you this understanding of how the market works. This is what will build up your logic of the markets. This will teach you how to be critical of the data and of price action and of what we are seeing on the charts. Reading this report will help build those skills. The problem is people will come and read the report. They have not put in the time to build up their logic and understanding of the markets. And instead they will come to the report and they will read it. And just like the example I was telling you about, somebody who's having instructions read to them but they don't know how to read and they don't know how to comprehend, they will read the instructions and they will get the wrong thing out of that information because they're not bringing in the information and using it in the correct way. We're laying out a process here. Without this process, there is no success in trading. Period. If you don't have a process built into you, you're not going to be successful trading. And we're giving you the process of how the market works. We're not teaching about, regular technical analysis of, horizontal lines and Fibonacci retracements. Those things are not dealing with the reality of the market. That's just surface level analysis. We are talking about how the market actually works here. So to be a successful trader, if you want to be a successful trader, there's nothing else you'd want to be focusing your attention on than to learn how the market actually works. Because once you understand how it works and you understand the logic of why it works the way it does, once you have that knowledge, you will come and read this report and you'll know exactly what it is that we're saying and why we're saying it and why we're highlighting these very important parts. You'll understand very clearly, and you'll start training your brain to think in this way when you look at a chart. And it's only through this process will you start to see your results in your analysis and results in your trading. Under this section here, the Sherlock session, this is dealing with higher time frames. Okay, we have a lot of asset managers, money managers, hedge funds that are members, and they have their own systems that they trade. Okay, they have their own ways of entering into positions that they deal with. Why they come here is because they're looking for more of a longer term perspective of what the markets are going to do. And so they come, they read the report, and they see what we're saying about what the Sherlock system is pointing out, because the Sherlock system is how the market works. It has a full understanding of how the market works, why it works the way it does. So when the Sherlock system says that the 6-month chart is uptrending, and that with the 3-month supply was removed and then there was a new monthly demand, this zone is a zone of interest for buying. Sherlock suggests waiting for a daily supply at 1960s to be removed for longs. They know that if that zone gets taken out, then it's a good situation for gold to continue higher. They may not understand exactly the logic behind it because they may not be putting in the time to understand that logic. But all they're waiting for is the 1960s to be removed so that they can implement their own strategies to start buying gold. All they want is, they want to buy gold and they want to go up. That's what they want. So that's why we have the Sherlock portion of the Araujo report, because it basically lays out for you what we are expecting over time. And so, as you know, we're dealing with 4 time frames, mainly. The 4-hour, the daily, the weekly, the monthly. So what does longer term mean? Longer term means multiple weeks or multiple months. Okay? Long term means multiple weeks or multiple months. What is short term? Short term is daily and 4-hour charts. So multiple days at maximum. Multiple days. Okay? It could be a week. It could be a week and a half. And there is no perfect way to know how long something is going to take. Okay? We can only say short term, meaning multiple days, maybe a couple weeks. Long term, multiple weeks, maybe even multiple months. It depends. We don't have crystal balls to tell you exactly what day things are going to do and how long it's going to take. That's literally impossible. Nobody can do that. But what we're telling you is, in these time frames, we are expecting certain things to happen. And when you're looking at the overview, what we're writing here in the overview is the process in which these longer term forecasts will play out. So for these longer term forecasts to play out, there has to be a shorter time frame process to facilitate those longer term moves. And so that is what we're breaking down here in this overview, is those smaller, lower time frame chart moves and what we are expecting based on what we're seeing with the data, based on what we're seeing with the chart formations. We're building up possibilities and probabilities of what should happen. And so in the next report, when price actually moves in the way that we had forecasted, this is a learning lesson. How is it that we knew with a high degree of possibility that a move was going to happen? Read the previous report. What were we seeing? That is where the magic is. What is it that tipped us off in the fact that we knew price was going to move in a certain direction? What was it about the chart? What was it about the positions? Through this process, if you use the report in this way, you will gain incredible amounts of knowledge. And this is how the report should be used. Now, for those that have been studying the charts, doing their homework, reading the reports, journaling, and taking in the information that they in the way that they're supposed to be, they will now come to the charts, come to the report, read the report, understand what it is that we're saying and why we're saying it, why we're pointing out the key pieces of information, what we're observing, and what does that mean. Then they'll know the odds of something happening. And then they can take the logic that they've accumulated through our classes, our reports, our video lessons, our analysis videos. They'll take all that, look at the charts, and they will have a clear understanding of what they should do, if they should be doing anything, if they should go long, short, or wait. They'll have a clear understanding. But in order to get there, work has to be done. Okay? It's very, very important to understand that. You can't, that again, this goes back to signal services. That's why signal services don't work, because it's like having 20 people, 100 people, 1,000 people, and they say, we don't know how to read, but we want you to read this page of instructions so we can follow. And you know what? They will all be doing something different. Maybe you'll have batches of people that do the same thing because of their life experiences are very similar. They might be doing the same thing, but the chances of all of them doing everything that they were supposed to do from the instructions and being successful is extremely, extremely low. Very low probability. On the other hand, you take 1,000 people and teach them how to read for themselves. Teach them logic, how to acquire logic, how to journal, how to go through these processes to train their mind to be logical and critical, and how to absorb information, and they will be able to comprehend things on their own. And then you will be able to hand them a page, they will be able to read the instructions, understand the instructions to the full extent, and have success. And that is how you find success in trading, and that's how you find success with our school. So I just wanted to point that out and make a clear video on how this process works, in case any of you had any questions in regards to that. Alright, thanks, and have a great day.